In today's video, I'm going to mostly just be looking at some long-term charts with some moving averages, but I'll start off with gold here. I think there's a pretty good chance that the manipulation by the banking cartel is in the process of breaking. So I'll show you a little bit more evidence of that here in a second, but the first thing I wanted to note is and I had noted this in some of the prior videos, that gold, at least intraday anyway, had moved above this prior intermediate pivot. And that's one of the main things. There are several, but that's one of the main things that makes me think that gold completed its 7-year cycle low right here in early November and is now in the advancing phase of a new 8-year cycle. If that's the case, then any more manipulation by the banking cartel is only just going to cost them more and more money, because gold will be now have a tailwind in its back, and they're not going to be able to stop that with any amount of manipulation. All they're going to do is get caught in more and more violent short squeezes. So anyway, this is probably the main signal that is suggesting that we completed the 8-year cycle low right here. We're making a higher high, but I'm not satisfied with just one. One could be a fluke. We got a marginally higher high in the Dow, and I'm not, we're starting to turn back down. I'll go over that here in a minute too. One marginal move above a higher high could be a fluke. So I've got to see more. I need to see this pivot broken as well. And this comes in at about, let's call it 1884, 1885. We'll round it up to 1885. If gold can get above 1885, then I think there's no more doubt. We are in the advancing phase of a new 8-year cycle, and any further manipulation by the banking cartel is just going to cost them more and more money. So now let me convert this to weekly charts. All right, so you can see here we've had 4 weeks where the cartel has just attacked gold and tried to prevent it from getting above this 50-week moving average. And they succeeded, a marginal break above it 4 weeks ago, but then, they pushed it right back down the next week, the week after. Big attack late in the week, last week, to defend against price going above this. But this week, they were not able to hold that suppression, and gold has closed fairly convincingly above this 50-week moving average. So this suggests to me that the manipulation is breaking, and the cartel is probably in the process of getting caught in a short squeeze. So that's gold. Now let me go to silver. You can see they lost the battle weeks ago in silver. They tried several weeks here to hold silver above it. I think they've probably damaged the physical market. We've probably got shortages in the physical market, and you can see we had this explosive move right here, indicative of the suppression, the manipulation breaking, and they have not been able to push silver back down at all. And silver is not too far from breaking this longer term downtrend line. So they lost the battle 4 weeks ago in silver. All right, and besides silver, platinum also appears to be leading the precious metals complex. It's been stuck in this sideways churn for about 2 months, I guess, almost 2 months, month and a half, something like that. And on Friday, it broke out above this consolidation, again, somewhat convincingly. So I think platinum and silver are leading. I don't think they would be leading unless the cartel manipulation is breaking, and then, like I said, gold has closed somewhat convincingly above that 50-week moving average. So the platinum market, the gold market, the silver market weeks ago are all showing signs that the 8-year cycle low is behind us, and any further manipulation by the banking cartel is just going to cost them dearly. All right, the only place where they're still succeeding in keeping the suppression intact is in the mining stocks. You can see there's been 4 weeks here where the miners have tried to follow the rest of the metals higher, and they just keep attacking. But they're not going to be able to hold this if the gold and silver, platinum, everything else is breaking out to the upside. They're going to lose this suppression as well, and they're just going to create a bigger move as the short squeeze unravels in the miners too. So maybe next week we'll probably get a break above this, and I expect when it does break, it's probably going to be a big move as the manipulation breaks. We saw that in silver. So we got the same suppression manipulation in the miners trying to hold this down. When it broke violently in silver. It's probably going to break violently in the miners as well when it does break. So maybe next week or this week, I guess it would be. Maybe this week this breaks and we get a violent move above this 50-week moving average. All right, so moving on to some other markets. All right, here's the Dow, and this is, you can see we've had this marginal break above this peak. So that is a higher intermediate high. But as I said, in order for this to be confirmed, we need to see the transports also make a higher high. And I can get an ETF here, I think. This is the transports. You can see they have not been able to make a higher high. Doesn't look very convincing that they will. So I think I'm going to probably assume that the bear market is still in play, and we're not done yet. If I go to the S&P here, you can see we've got a very similar pattern in that this bear market rally came up, tested this declining 50-week moving average, couldn't recover it, and then we started down, made a slightly lower low. That's kind of what happens in these bear markets, and then sometimes you'll get a all-out collapse when you move into the final stage of the bear market, but very often this is kind of how they unfold. You'll get a bear market rally, then you'll get a leg down, but the leg down won't make a significantly lower low before you get another bear market rally. Again, test of that 50-week moving average, couldn't break through it. Looks like we're heading down again. So no confirmation in the transports. This doesn't look very constructive to me. It looks like this is probably a bear market rally that is petering out as well and is going to come down and make a lower low. Oil, clearly not even close to getting back above this 50-week moving average yet, but I am seeing some signs that this could very well be it is at least a daily cycle low, and we've got a weekly swing here, so it looks somewhat convincing that maybe this is an intermediate cycle low. And if it is an intermediate cycle low, then this may turn out to be the 3-year cycle low. The one fly in the ointment is that it's looking like the stock market is probably going to make another leg down, and this may pull oil down with it. So we may get a convincing rally here, but one that doesn't quite make a higher high above this intermediate top, and then has to roll over and make a lower low sometime in the spring, maybe in March or April. So I'm going to have to see a lot more out of oil before I can say with any degree of confidence that this is a final 3-year cycle low. And then finally, let's take a look at the dollar. All right, so the dollar here, tried 2 weeks here, tried to hold above this 50-week moving average, and also there's a major support zone right in here, and it did hold that support zone for 2 weeks, and I think almost everybody, myself included, was expecting we would get at least a significant bounce off of that support zone. That's a major support zone. I know there's a lot of dollar bulls that were expecting that the this correction would end and bottom on that support zone, and then we'd come back up, and a lot of people are looking for higher highs in the dollar. That wasn't really my scenario, but I did think that we would get, at least some kind of bounce, and then probably roll over and start down again. But instead, this week, the dollar has closed convincingly below that 50-week moving average. I don't think that would happen unless the dollar is in the declining phase of its 3-year cycle. So here was our 3-year cycle low. Pretty convinced at this point that this is the 3-year cycle top. This 3-year cycle isn't due for its next multi-year cycle low until about the spring or summer of 24. So we got a lot of weeks and a lot of months for this to continue down, and the fact that it could not get any kind of significant bounce off that major support zone is not a bullish sign by any means. All right, so here's that support zone right here, and you can see held it briefly for 2 weeks, and then now this past week it broke through that. So not a good sign if you are bullish on the dollar, not a good sign at all. So at this point, I think the next reasonable spot where the dollar could get some kind of a bounce would be maybe on the February FOMC meeting, and maybe at the 50% Fibonacci retracement. Let me put that in. All right, so here's the Fibonacci levels, and the 50% comes in right around 102 here. So maybe that would be enough support to get enough buyers to come in, and we could get a bounce. But as I said, all the signs are pointing to this being a 3-year cycle top, and we're now in the declining phase of this 3-year cycle. And if that's the case, the banking cartel has basically no hope of keeping the metal suppressed any longer, and further attempts are just going to result in more and more violent short squeezes, and it's my opinion that we're probably going to get our bubble phase in gold during the advancing phase of this 8-year cycle. So again, this is not due to bottom until the spring or summer of 2024. So that would be the timing band, in my opinion, for gold to give us that final bubble top. Would be, maybe mid 2024 or fall of 2024. So we could get that bubble faster than most people are expecting. And I think a lot of people are not anticipating that the dollar has topped and is now in this parabolic structure is collapsing.